So have you ever been watching price approach a critical level? It's representing your edge. You're getting ready to get into the market, but you hesitate because you do not understand where price is headed, right? You do not have that little feeling inside of your heart and your soul that gives you the conviction to actually pull the trigger and enter a trade. Well, today we're going to break that down. Today we are going to dive deep into the tools, the principles, and the concepts that I use and understand that help me get in and out of the market with way more confidence, with way more conviction. And the way we're going to do this today is we are going to break down the first half of January, right? I got 9 trades in front of us that represented our edge, and I want to break them down in a way that's going to help you pull the trigger and capitalize on great opportunity in the market. Right? So before we go any further, guys, if you want to get involved with a team that puts in tons of work and is pushing themselves each and every single day to become the absolute best versions of themselves inside and outside of the market, click the links below and get affiliated with HPT. Subscribe to our newsletter and I will send you free high-level summaries on our edge every single month at no charge to you. My goal is to help traders find that hidden potential inside of themselves so that they can become confident, convicted traders that are going to competently execute in the market day in and day out. I am going to build the best team, a team of traders that work together, that are leaders, and that do not break character. They show up to the market with a process and they know how to implement it daily. That is my goal. So if you want to apply to the High Performance Trader, click the links below and check it out. So today in this video, we are going to talk about competence. We are going to talk about understanding your edge in a way that allows you to capitalize on market opportunity without having to overthink the process. See, I have been trading for almost 6 years now, and this is the thing. One thing that I've found that helped me, looking back, become a way better trader is building confidence in my edge. And to do that, you need to be very clear. You need to have a very clear understanding of what it is you're actually looking for. Do not be the trader that shows up to the market and just hopes you have a great day. Instead, be the trader that is well prepared, that understands exactly what works for him and what doesn't. And once you understand this, you then build a process, and now it's up to you to execute it. So today in this video, we're going to break down the month of January, the first half, and I want to break down some really cool things that I've noticed. Right, so this is one of our high-level summaries here. This is what I send out to every trader that's a part of my team every single month, right? And one thing I want to point out, we have been doing this study, right? We have been collecting analysis and data on this strategy for 1, 2, 3, 4. We are on the 5th month, and it's so crazy. Right? Because you guys know how much of a nerd I am when it comes to principles and systems, right? It's so crazy to me that we can perform this repeatable approach for 5 months, and every single month isn't the exact same, but it's within the same vicinity, right? And what I mean by that is the win ratio. Look, month of September, 72%. October, 72%. November, 85%. December, 73%. January, 77%, right? So when I look at this data, the one word comes to my mind: repeatability, right? This edge is extremely repeatable. And now what actually makes you a confident trader? I remember in my beginning years, I would have a great day on the market, right? I'd feel good, I'd execute, maybe I'd make a good chunk of money. But when I was going to sleep that night, I would ask myself, can I do it again tomorrow? I truly believe this question that many traders ask themselves is the key to becoming a confident, consistent trader. Can you do it again tomorrow? Right? And when you ask yourself that question, you have to be real with yourself. Can you actually approach the market from a state where you know that you can repeat your edge? You can execute on it flawlessly, without any hesitation, but more importantly, you know what to look for. And that is the purpose of these high-level summaries. That is the goal over here at High Performance Trader, is to get every single trader to a point where they know exactly what they're looking for and they have the discipline and self-control, and ready, the awareness it takes to wait for it and execute it when they see it, right? So that is the goal of these high-level summaries, and that's what we're going to be doing today, right? But I thought that was really cool. So let's break down the first trade right here. This was the first trade. This is 1/2/2025. This was a losing trade, right? And I just kind of want to break down what it is we were looking for. Once again, we're looking for open print to be established, right? Very simple. You don't need to do anything to do that. You just need to identify open print, right? That's the open print, open price print, right? Right at 9:30. Then I need a moving average cross, right? So you're going to notice here. Step 1, open print. Step 2, identify the moving average cross. So price sells off, rallies above, and we get that little cross right there. You guys see that arrow? That's the HPT indicator indicating that price has shifted, right? That's the 5 in the 21 EMA. But notice here, our third and most final and crucial component is the RBI GBI entry, right? So once again, step 1, open print. Step 2, moving average cross. Step 3 is the red bar or green bar ignored on the 5-minute time frame for me to actually get into the trade, right? So you're going to notice here we get a red bar, but it does not get ignored. Therefore, I do not enter the trade, right? Price sells off, we get a moving average cross to the downside, we get a green bar that's been ignored, we enter short, targeting downside targets, and we get stomped out here when price rallies right above the candle that we entered in on, right? So you always put your stop above or below the previous 5-minute candle. And the concept and philosophy behind this is we're always risking 1 bar, but on our profitable trades, we're making 2 bars, 3 bars, 4 bars, right? So once again, risk reward is critical for you to become a consistently profitable trader. This is our approach. This is what we do each and every single day. Now, yes, this was a losing trade. Do we change the whole strategy because of it? Absolutely not. What we do is we wait for the next opportunity. Now, check this out. This is 1/6/2025, right? This is a couple days later. And open print established. We get our moving average cross. We get a red bar that's been ignored. We enter the market long. It does not matter that our first bullish target was only $1 away. It does not matter if there's a resistance, a supply zone. It doesn't matter. You know why? Because this strategy has been fine-tuned to the point, right? And we've done enough back testing. We've done enough data collection, and we've analyzed it to know over a large period of trades, this strategy works. It's repeatable. I don't need every single trade to be green to become consistently profitable. And this is one of the main reasons why 95% of traders fail. It's because they're so concerned with today's results that they're not focused on the long-term game. To become a good trader, you must play the long game. Do not worry about a loss. Instead, keep your losses in check, risking that 1 bar, and then on your winning trades, you're going to notice here, you're catching great trends, right? Look at this beautiful rally, ignoring the red bar. Buyers are clearly displaying their dominance in this scenario, and we want to be a part of it. This was a beautiful trade. Hit our first target, price rallies up to our second target. Beautiful. Next trade here, open print established. We sell off, we come up. Sellers defend the open, moving at green bar here, ignored, price rallies, sinks. Beautiful trade, right? Here's another loser. Now, once again, we took 9 trades so far in the month of January that represent this edge. 7 of them were profitable trades. 2 of them were losses. We already went through 1. This is the next. Open prints established, moving average cross, right? We get a green bar that's been ignored. We enter short, right? And honestly, I wouldn't even take this because of how large my risk would be. But I still wanted to gather it, right? Because it's still the same components, right? I'm more focused on how well the market performs after this criteria has been met, right? So once again, we go short, stop above the green candle, and we get stomped out of the trade. Once again, do we change the strategy? Absolutely not. Yeah, we may look for some things we could look again for the next day, but the overall strategy remains the same, right? And why? Because look what happens later in the day. Price comes up to open print. We get a red bar that's been ignored. We take the market long. We capture over $1 move to the upside, right? And that's another critical component to this strategy is, yeah, we're looking to capture the space from critical level to critical level, but that is not a requirement. If you come up here, you're going to see the requirements, right? We're trading off critical level. We have a moving average cross. We get a red bar or a green bar that's ignored. It's before noon. And ready? The required price movement is $1 in the appropriate direction, right? So if I can get a move that's at least $1, I know that's going to be a profitable trade. That is what I'm going for each and every single day. Whether you're trading SPY or SPX, $1 move is going to pay you anywhere from 29% to over 50% if you're trading SPX, right? So $1 in our direction is our requirement. Once again, beautiful trade right here. This one was flawless. It happened very quickly, but we were ready for it. Why were we ready for it? Because the amount of study and preparation and work that we have put in to build that conviction. Confidence, control, and conviction is the only way to becoming a very good, consistent trader. And the only way to do it is by gathering data and reviewing it, right? This was a beautiful, beautiful example of our trade here. Open print, established. Notice here, we get 3 wicks to the downside here at open print, but buyers kept prevailing. They would not allow sellers to take the open. That's telling us something. We get a red bar here that's ignored. We get the moving average cross. And ready? The third and most critical component is we get the red bar that's been ignored. We take the market long, targeting previous day low here. This is a beautiful trade. And this is the trade I really wanted to break down, right? This right here, if you guys can take one thing from this video today, let it be the RBI or GBI entry. And this is why I want to break that down. Our strategy, like I've told you before, has been fine-tuned in a way that if you actually wait for all 3 steps, you will avoid so many bad trades. Go through your journal, look at your losing trades, and ask yourself, if I didn't force setups, act impulsively or irrationally, and if I actually waited for my approach and process, would these trades still be in my losing section of my journal? And the answer is absolutely not. One of the main reasons I've become so systematic is because 90% of my losing trades were just erratic, impulsive, irrational trades that I were taking, right? It was either out of FOMO, it was out of fear or hesitation, right? See, these things keep us from reaching the true potential that we have inside of us as traders. So if you can find a strategy like the one we're about to break down, you're going to stop making those bad decisions that are costing you so much in the market. Once you have that strategy, trading now becomes 90% patience because you're aware of what works. It's not hard to be patient. It's not hard to be disciplined when you know what to look for. See, the definition of ignorance is blindness, right? Meaning you're not aware of what works. If you can become aware of what works, it's much easier to not make those bad decisions, right? So I understand what works, and what works is the RBI GBI entry process. And I'm going to show you in this trade why that works. So our first 2 components of the strategy. Number 1, identify open print. Open print is the 9:30 bell price. Ding, 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 that's open print. Number 2 is identify the moving average cross. I need a moving average cross between the 5-minute and the 20 EMA, right? So that's the 5 EMA and the 20 EMA. When those cross, there's my moving average cross. So look at right here. We get the cross, but we get no green bar that's been ignored. Once again, this is on the 5-minute time frame. So I do not enter and will not enter until I get that GBI. Until I get the green bar to be ignored, which was right here, I will not enter the trade. And it's for a few reasons. Number one is notice the chop when you don't get it. Right? When you do not get an RBI or a GBI, you are you are at a higher chance of being in chop. Right? I've done the study, I've done the back testing. It doesn't make sense to me to enter a trade until I see this criteria, because I know, I'm fully aware, if I choose to enter, there is a very high chance that I am trading in chop. So therefore, I remain patient and I do not get in the trade. Look, price comes back up to open print and we start to sell off. Once again, there's been no GBI, so I do not enter. And then look at the pullback. Say I just decided here to go short because I didn't want to miss the second leg down. I would have gotten chopped out on this green candle. That's like $1.50 large, right? So instead, once again, I'm following my moving averages. I'm waiting for the entry criteria. We finally get that green bar that's been ignored. What does ignored mean? It means the low of this candle has been broken. Why is it significant? Because if buyers were strong, they wouldn't allow it to happen. I'm going to say it one more time. If buyers were strong, they wouldn't allow sellers to push price, the auction, below the previous candle. Right? If buyers were strong, think about it. If they were trying to buy that car and they were, oh, I'll pay $1,000, I'll pay $1,200, I'll pay $1,300. If they were strong, they wouldn't allow the auction price to go below 1,000. It's the same concept. You guys need to understand this. This is how the market works. And when you understand this concept, it makes it way easier to make the right decisions. Right? So this is where I went short, stop above that candle, and then caught a beautiful move to the downside. Price rallies right into end of day, rejects. We get another green bar, ignored, stop above, capturing a beautiful trade. Right? So that was a beautiful setup. This was a beautiful setup. See, guys, once again, if you take anything from this video, right, we talked about a lot. We talked about the importance of data. We talked about building conviction, confidence. But the main thing I want you to take from this is ignorance is not bliss. Ignorance is blindness. If you are making bad decisions in the market, it's because you are ignorant to what actually works. If you want to get out of your ignorance, if you want to become aware, the opposite of blindness is light, is knowledge, is being able to see. Learn to see, learn the concepts, learn the principles, learn the strategy, and just try it out. I guarantee you, if you learn to approach the market with a repeatable approach, everything will change for you. Hope you guys like this video. Make sure you hit a like, subscribe for more, send it to somebody that needs it. More importantly, apply it to our team and make that decision to level up. I'll see you in the next lesson.